4,000 years before FICO, before credit bureaus, before banks, one civilization created a system so sophisticated that it would define trust itself. This is the story of humanity's first credit score. The year is 1750 BCE, Mesopotamia, the land between two rivers. A merchant named Ea Nasir walks through the copper bazaar of Ur. He needs grain. His harvest won't come for 3 months. In our world, he'd swipe a credit card. In his world, something far more interesting happens. The grain seller doesn't ask for silver. He asks for Ea Nasir's reputation. Not a feeling, not a handshake. A physical record, carved in clay, witnessed by scribes, stored in temples. This is the birth of the credit system. The Babylonians understood something profound. Economies don't run on gold, they run on trust. But trust is invisible. It evaporates, it lies. So they did something revolutionary. They made trust tangible. Every transaction was recorded. Loans, repayments, defaults, interest rates, yes, they had those, were standardized. 20% for grain, 33% for silver. The Code of Hammurabi, carved into black diorite, wasn't just law. It was the first credit regulation framework. But here's where it gets fascinating. The Babylonians created something called bitmaps, debt tokens, small clay seals that represented outstanding obligations, portable, transferable, tradable. They invented debt instruments 3 millennia before Wall Street. The Temple of Shamash in Sippar functioned as a central credit bureau. Scribes maintained records spanning generations. They tracked family debt histories. Creditworthiness was inherited. Your grandfather's default could haunt you 70 years later. The system was ruthless. Miss a payment on a barley loan? Your land became collateral. Default twice? Your son became an indentured servant for 3 years, the maximum allowed under Hammurabi's reforms. Before that, permanent debt slavery. The code limited it, regulated it. Civilized interest wasn't arbitrary. It was mathematical. Compound interest existed. The concept of shibtu, literally seizure, meant interest that accumulated monthly. They calculated it using base 60 mathematics, the same system that gave us 60-minute hours and 360-degree circles. The scribes who managed the system were the elite. Training took 12 years. They learned 3 languages, Sumerian, Akkadian, and the language of numbers. They memorized thousands of cuneiform signs. They mastered complex accounting principles that wouldn't be seen again until Renaissance Italy. These weren't simple bookkeepers. They were mathematicians, lawyers, and economists rolled into one. A master scribe could calculate compound interest in his head, draft legally binding contracts, and arbitrate disputes between merchants who spoke different languages. They were the first professional class in human history, paid not for physical labor, but for knowledge. Every clay tablet told a story. Tablet IM 49368 from the British Museum records a loan between 2 brothers in 1700 BCE, 30 shekels of silver. Interest rate of 20% per annum. Repayment due after harvest, witnessed by 3 scribes and a temple priest. The borrower's fingerprint is pressed into the clay, a biometric signature 4,000 years old. But the genius wasn't the math. It was the network effect. Every city-state in Mesopotamia used compatible systems. A merchant's credit reputation in Babylon was valid in Ur, in Nippur, in Lagash. They created the first interoperable financial network. Think about what this means. A trader could leave Babylon with nothing but his reputation and conduct business 300 miles away. The temple networks communicated. Messenger tablets traveled between cities. Your credit history was portable, verifiable, and nearly impossible to fake. The tablets themselves were ingenious technology. Wet clay accepts impressions but hardens to stone. Any alteration is immediately visible. The cuneiform writing style, wedge-shaped marks pressed into clay, made forgery nearly impossible. Each scribe had a distinctive style, like a fingerprint. Experts today can identify individual scribes across decades of tablets. The physical properties of the medium shape the entire system. Clay tablets are nearly indestructible. Fire doesn't destroy them, it bakes them harder. Water can't dissolve them once fired. They don't rot like papyrus or parchment. The Babylonians accidentally invented the most durable data storage format in human history. Your hard drive will fail in 10 years. These tablets are still readable after 4000, and they planned for disasters. Every major transaction was recorded on multiple tablets. 1 copy stayed with the lender, 1 with the borrower, 1 went to the temple archive. Some high-value contracts had 4 or 5 copies distributed across different cities. This wasn't just record-keeping, it was distributed ledger technology. The interest rates reveal sophisticated economic thinking. Grain loans were cheaper than silver loans because grain was collateral that grew. If you defaulted, the lender got your field and next year's harvest. Silver was sterile. It didn't reproduce. Higher risk, higher rate. They understood time value of money 3,000 years before economists gave it a name. Seasonal adjustments existed too. Rates dropped before harvest when farmers needed seed grain. They spiked during droughts. The Code of Hammurabi set maximum rates to prevent predatory lending, but market rates usually ran below the caps. Competition worked. Even in ancient Babylon, then disaster struck. Around 1600 BCE, the old Babylonian period collapsed. Hittite invasions, climate change, drought, trade routes severed, cities abandoned. The credit system faced its first stress test. And here's what happened. It survived. Because the system wasn't dependent on political power. It was embedded in culture, in religion, in the social fabric. The temples preserved the records. The scribes trained new generations. The clay tablets survived fire, flood, and conquest. When the Kassites conquered Babylon, they adopted the system. When the Assyrians built their empire, they expanded it. When the Persians absorbed Mesopotamia, they kept the scribes employed. The technology was too useful to abandon. Conquerors came and went. The credit system endured. Here's a detail that should blow your mind. We have tablets recording the same family's debts across 8 generations. The House of Aghibi, a merchant dynasty in Babylon, left an archive spanning 2 centuries. We can track their business relationships, their credit standing, their rise and fall, all frozen in clay. The Aghibi archive contains over 2,000 tablets, birth records, marriage contracts, property deeds, and yes, credit histories. We know that in 570 BCE, a member of the family defaulted on a silver loan and had to sell a palm grove to cover it. 50 years later, his grandson used that same default as leverage in a business negotiation. The family remembered. The records remembered credit karma spanning generations. One tablet records a dispute from 1163 BCE. A merchant claims he repaid a loan. The lender disagrees. They go to temple court. The judges demand the receipt tablet. The merchant produces it. The lender's seal is clearly impressed in the clay. Case closed. Evidence-based justice, 3,000 years ago. When archaeologists excavated these sites in the 19th century, they found tens of thousands of tablets, business contracts, loan agreements, receipt records, letters of credit, bankruptcy proceedings, an entire economy frozen in clay. We know more about Babylonian credit practices than we know about medieval European banking. The first major discovery was in 1877 at Tello in southern Iraq. French archaeologist Ernest de Sarzec unearthed an entire temple archive. Room after room of tablets, stacked like books in a library. Many were still in their original clay envelopes, sealed contracts that could only be opened in case of dispute. Inside each envelope, the contract text was repeated on the outside. A tamper-evident system from 2000 BCE fast forward to today. Your credit score, 3 digits, generated by algorithms, stored in databases. Sounds modern? It's the exact same principle. Trust, quantified. Reputation, standardized. History, weaponized. The Babylonians understood what Silicon Valley is still learning. Data is only valuable if it's trusted. Their clay tablets couldn't be altered without detection. The wet clay showed tampering. The witnesses provided verification. The temple archives provided redundancy. They built a blockchain 4,000 years before Bitcoin. Every financial innovation we celebrate, credit scoring, interest calculation, debt instruments, regulatory frameworks, central record keeping, dispute resolution, was pioneered by scribes in linen robes who never saw a computer. They worked by oil lamplight, calculating in base 60, building the foundation of every transaction you make today. The next time you check your credit score, you're participating in a system older than the pyramids, more enduring than empires. A Babylonian innovation that survived the Bronze Age collapse, the fall of Rome, the Dark Ages, and emerged into our digital world fundamentally unchanged. Trust as technology, reputation as currency. History is destiny, but the Babylonians had a problem. Their system was perfect for tracking debt. Too perfect. Because 600 years later, one king would discover something terrifying. When everyone knows everyone's debts, the entire economy can be held hostage. His name was Croesus. And he would break the system in a way that changed money forever. His solution? So radical that we still use it today. Every coin in your pocket, every dollar in your account, every Bitcoin in your wallet, all of them trace back to one king's desperate gamble to escape the tyranny of trust.